and welcome to Tea on Tax Tuesday. Today we're going to be talking about how individuals are taxed and what that looks like on an individual's tax return. So, here we go.
So this is an individual tax return, and what we're going to do is just go over the basics of how an individual is taxed and what a tax return actually is. So as an employee, you have an agreement with your boss. You get a job, you have an agreement. Your boss says, I'll pay you blah, 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 and I'll also take the tax out of your pay and pay it to the ATO on your behalf, trying to eliminate the fact that you will be getting a tax bill at the end of the year. So how has this worked out? Now, this is worked out on the income that you earn. So if we look at this client, she earns $72,697. The deductions will vary, we don't know what they are, but we'll work it out on the base amount. So to do that, we need to look at the marginal tax rate. So the marginal tax rate is a sliding scale that every individual pays. So between $0 and $18,200, we pay $0 in tax. Now that is for everybody. Now to work out the rest, up to the $72,000, we need to work out first how much is $45,000 minus the $18,201. Now that is charged at 19 cents in the dollar, taxed at 19 cents of the dollar. Now here's the marginal tax rates on the ATO website. So as we can see, that the calculation has been done there for us. So $5,092 on that amount, between $18,201 and $45,000. So on the $26,000, $5,092. So the next amount that we need to work out is between the $45,000 and the income that the client's earning. So this income is $72,697. So we work out the difference of that, and we work out what that tax bracket is. So this amount is 72,697 minus the 45,000 equals 27,696, and we times that by the marginal tax rate, which we see here is 32.5 cents. So that $27,696, we times that by 32.5 cents, meaning tax we pay in that bracket is $9,002. These are approximates. So we add that together. So 9,002 plus the 5,092, $14,094. So we go back to our agreement between the employer and the boss, and I'm going to pay that amount of tax out to the ATO quarterly installments, but I'm going to take it out of your paycheck weekly. So therefore you don't get that great big tax bill at the end of the quarter. So obviously we don't know the deductions, and this is where your tax bill will be different from other individuals based on the deductions that you're entitled to. The other thing that we need to look at is offsets. So the most important thing to remember about offsets is they are not cash in hand. They are an offset. So the government sometimes makes it sound like you're going to get an extra $1,000 in your tax return, and people run off and try and get this $1,000. It doesn't work that way. What it does is it reduces the amount of tax assessable. So it's not a cash in hand, it's an offset. So just got to be mindful of that. You're not going to get $1,000, but thank you to the government for giving us the low middle income offset. Obviously, we pay for our medical expenses and subsidise those who can't. So 2% of our income is paid to Medicare. So that is also something that is withheld by our employer throughout the year. So if we look at this tax return, we go back here, we see that throughout the whole year, this boss has withheld $15,876. The tax assessable to be paid is $14,305.66. Therefore, the refund, $1,570.34. Oh, damn, refund. Let me spell it right. Bear with me. So the other important thing that we're remembering is it's a tax refund. So our bosses paid our taxes throughout the year, and we go, thanks boss. Now I'm going to go to my really clever tax agent, Abby. She's going to work out all of the deductions that I'm entitled to, and we're going to get a return from the ATO because of effectively overpaying tax. Now, this is where some people get caught up when they decide to start their own business and they become a sole trader. So, with your boss, he holds off the deductions. We've got the tax that's withheld, the deductions, the offsets, we add the Medicare, and then that is what we get with the refund. Now, with sole trader, if you decide to become a sole trader, you don't actually pay any tax. So a lot of people come to me and they started a business. They've come to me after the fact and they said, I'm a sole trader now. Where's my big tax return? Well, you don't have that boss who's been paying your tax along the way. You don't have someone putting it away for you little bit, little bit, little bit, little bit, little bit. So what we can do is reduce the amount of tax and organise payments quarterly. But hey, join me next week because I'm going to cover this in more detail. So tax on sole trader income.
Thanks for listening in. I'm Abby Morfitt, your registered tax agent.